Despite strong signals that the U.S. economy is on the mend, Wall Street had a mixed day. While the Dow Jones, plus 0.3%, closed at a fresh record, the S&P 500, minus 0.1%, fell slightly below its break-even point. The S&P was dragged down by the financials sector, minus 1.3%, which had its worst day since early November. The Nasdaq traded 0.2% higher, driven by stocks in the healthcare sector, plus 0.3%. The Federal Reserve raised interest rates by 0.25% on Thursday morning. This is the third U.S. rate hike this year, with the federal funds rate now at 1.25–1.5%. The Fed projected 3 more hikes in each of 2018 and 2019 before a long-run level of 2.8% is reached, which is unchanged from the last round of forecasts in September. Economic activity has been rising at a solid rate. Job gains have been solid, the Fed's policy setting committee said in a statement. Fed Chair Janet Yellen, in her last press conference before her 4-year term ends early next year, pointed to the Trump administration's proposed tax overhaul as the impetus for an upgrade of policymakers' economic growth forecasts. The Fed now sees gross domestic product growing 2.5% in 2018, up from the 2.1% forecast in September. Most of my colleagues factored in the prospect of fiscal stimulus, along the lines of what is contemplated by Congress, into their projections, she said. But Yellen said the precise impact of the tax plan, which includes a sharp reduction in corporate income taxes, depended on various factors. While changes in tax policy will likely provide some lift to economic activity in coming years, the magnitude and timing of the macroeconomic effects of any tax package remain uncertain, she said. The U.S. Senate and House of Representatives have made progress with reconciling their competing tax reform bills. Congressional Republicans reached a deal on the final form of the bill, the U.S. Senate's top Republican tax writer said on Wednesday. "I think we've got a pretty good deal," Senate Finance Committee Chairman Orrin Hatch told reporters. This would see the corporate tax cut would be slashed to 21%, far below the present headline rate of 35%. Further details of the agreed legislation were not yet available, and a final bill could be formally unveiled as soon as Friday. If President Donald Trump can sign the bill before year's end, it would be the first major legislative victory for him and the Republicans since they took control of the White House. The ASX is expected to track Wall Street's solid performance, and open higher today. The Australian dollar is considerably stronger, having risen 1% to 76.33 US cents. This is due to broad-based US dollar weakness, said Commonwealth Bank's Elias Haddad. Mr. Haddad believes there is room for the local currency to make further gains due to favourable Australian employment conditions and encouraging Chinese November economic activity. According to economists polled by Reuters, 18,000 new jobs will be created in November, the participation rate will remain steady at 65.1%, and unemployment will be unchanged at 5.4%. Also out today is China's latest retail sales, fixed asset investment and industrial production figures.